Hi, good evening, everyone. Welcome to another webinar, and I've been given the wonderful mantle of trying to chair this really interesting moment that we have in time. Deal making, preparing land managers for new and emerging income streams and markets. We have two wonderful speakers this morning, Paul Cottington from the NFU, who's the Environment Advisor for the Southwest, and Greg Beeton, who is a partner in Brown & Co. and is the Master of Natural Capital and Landscape Change. We're going to have two presentations from them lasting about 15 minutes, followed by the Slido moment where we see what you, the audience, really are wanting to hear from our presenters. And that will then be followed by a Q&A session chaired hopefully by me, if I can work out the technology. But I think from my perspective, on someone who oversees a significant amount of natural capital, it's understanding what it is and how it changes and how that affects you and your farm businesses, and where you can make improvements and how you can dress the packages up and the deck up to these new investors that want to invest in natural capital, environmental gain, carbon sequestration. There is a new market emerging, and we want to put you in the right place to prepare for it. Thank you.
Great, Jake. Thank you very much. And yeah, this is going to be another fascinating webinar. There's so much to cover. We're at a time with massive change, so I don't think there could be a more timely opportunity for these kind of presentations. Just quickly as an intro, I'm sure you all know me. My name is Tim Hopkin from the Land App and Land Management 2.0, really here to make a difference to the sector and see what we can do to create this new natural capital market. So for our first presenter, as Jake just shared, we have Greg Beeton, the Divisional Partner at Brown & Co., who heads up all things natural capital. So Greg, I'm going to hand over to you for your 15-minute presentation.
Great, thank you. Thanks for the intro, Tim, and also Jake. I'm going to assume the technology is working unless anybody tells me otherwise. Very pleased to be here. I want to run through, really from a farmer's perspective, how the view from the ground is in this very changing scene where we sit at the moment. Just on Brown & Co., I think we're very well positioned to do this, very Eastern region based. 2,500 farmer clients, 350,000 hectares footprint. So I think that gives us a pretty good view of how farmers are reacting to the current situation. First thing is, there's a lot of noise out there. We started back in 2020 with all of the policy change messaging. We're now into the second year of that, and we're really starting to see some of the actual changes kick in here in 2021. Which is the wheel on the right-hand side here. And the one that really is going to start biting falls around BPS loss. And I think that this is something that is going to have a growing impact on land use choice for farmers. So just a couple of points here on this slide I want to pull out. The first one is down the bottom, we just have a reduction estimator. As we know, it disappears by 2027. We've just been working with DEFRA for the last 14 months with a group of 800 farmers, and over 50% of them think their business are not viable without BPS. Not viable means making loss, which means they will not be able to continue. Interestingly, out of that same survey group, a significant proportion, nearly 45%, fell in the bottom BPS band. And I think these are smaller farmers. These are farmers around about 130, 150 hectares. And I think this group is going to struggle most with trying to replace that BPS payment to some extent, not fully, with what comes next. And I think aggregation is going to be key for them. And that's something we'll talk a bit more about. Just to go back, with the new policy landscape comes lots of new words. And I think there's a whole new language here that we've all had to get used to. The word that keeps coming back is carbon in most conversations. So, as well as policy, the other thing that's really affected agriculture over the last 2 years is the weather. I'm sure everybody's realised how wet it has been. There's water laying in places it hasn't laid for years and years. And what this has meant is severely compromised crop production. And what we're seeing now, these are figures from AHDB, the levy board, and we're looking here, if we look at the graph on the right, over 3 years of net margins for 3 staple arable crops in the eastern region: wheat, spring barley, oilseed rape. Anything above this blue line is net margin positive, so it's profitable. Anything below that blue line tends not to be. Increasingly, we're seeing break crops, spring barley, oilseed rape, producing consistent negative returns. And the challenge is, what do farmers do with those crops? Where do they move going forward? As well as thinking about some of the impacts, we like to think about some of the opportunities. And again, in the work we've been doing with DEFRA, we've been asking farmers where they see the potential to try and fill some of these gaps. Pretty much all of them are able to identify some potential assets that they hope to get some future income streams from. So the thinking is changing, which is fantastic. Interestingly, given this is an Anglian Water webinar, over 80% of farmers seem to think there is potential there from water sources or courses, some income in the future. One challenge we're going to have is, of that sample group, only 9% or 9.8% are currently working with others. And collaboration and aggregation is going to be key in the future. So there's a challenge there to get more joined upness in thinking. And I know that's something that Tim is very strong on with the Land app. So what's available today that farmers are gripping hold of? Well, the first one is woodland, and we've seen a steady stream of interest in the new woodland initiatives. This has really taken off in the last 18 months since the introduction of the Woodland Carbon Guarantee. We have become the largest project developer in the woodland carbon auctions, and have seen interest from a whole range of landowners. It achieves reasonable income levels. It's not going to replace some crops, but it's there particularly when aligned with other income streams. I think we're also starting to see some high yielding, carbon yielding, and therefore income yielding new plantation options emerging as well, which are going to be quite exciting. I think in this whole process, what's really emerged is, and we've been working really closely with the Forestry Commission on this, is the right tree in the right place is really important. And working through a process that's a win-win for everybody is important. This process takes time, 12 to 18 months. I think the real success factor here has been a clear and workable framework and an underpinning of the market. And that's something we don't have in other areas at the moment, but it's been a real success factor in the woodland work. The second area that farmers are really grasping hold of right now is stewardship, and the number of schemes are just increasing daily. Historically, stewardship schemes have tended to be looking around static options, so those that look at margins, buffer strips, field corners, areas of wild bird feed, pollinator mixes. Increasingly, there's some really good capital incentives in place, particularly around water management, planting hedgerows and the like. But the area that's really taken off are rotational options. And this is where whole fields and stewardship options form part of rotations. So they're substituting for those low margin crops that I mentioned in a previous slide. The schemes are really flexible. They reduce income volatility on farm and are really going large. From our perspective, last year alone, the new schemes we put in that started on the 1st of January this year amounted to 190 new schemes in the eastern region. That's 36,000 hectares of farmland in schemes, of which 7,600 hectares is actually under an environmental measure. The figure here that I think is really interesting is that represents 21% of those farm areas. That's a real change towards land that is being focused and dedicated towards an environmental good. We're expecting this year to do another 250 at least, so it's growing, and I'm sure others are doing the same. There's a real opportunity here. It's not to focus just on the financial return from those schemes, it's to think about how we can capture some of these ecosystem service benefits. How can we measure the benefit of all this pollination that is being created? How can we think about planning these schemes so they deliver to local nature priorities? So that connectivity and planning beyond farm gate, I think, is a real opportunity. So let's look a little bit towards what is not quite here yet, but is coming in this natural capital area. So we're starting now to think about baselining. We're working with a company called Natural Capital Research at the moment, and we're about to start producing heat maps that actually look at the baseline for natural capital assets on farm, how they convert into an ecosystem service, which is the element that could be monetized, but then thinking, how might we actually maximize that? If we were to really push it and build on that, what might that look like? And then the really interesting bit is to say, actually, how far do we want to go down that road? How far do we want to push it? And that's where we start thinking about the trade-offs between other productive uses of land on the farm. This is going to drive land use change, thinking about different rotations, about different structures, different finance flows, but the overall ambition is to achieve the most appropriate land use for any unit of land. So we're describing that really as is decision making today based on the evidence of the future, thinking about a scenario of if in 5 years' time we're in this situation, what do we need to do today to get us to that place? We also hope that we can then quantify and monetize some of the outputs from that. And I think from my land agency colleagues, it will provide a basis towards thinking about land valuation. A few extra bits to throw in around the edges here. Additionality, really, really important. And I think often forgotten. I see and I get clients coming asking about land for sale and thinking about whether that can be an easy offset for them in the future. The question is always, what can you do to change the management of that land to deliver additionality? Because leaving it as it is and just buying it and leaving it there is not going to do it. So additionality is really important to consider. Quality of carbon. I think this was mentioned in the webinar last week, and I think it's really important that we all try and ensure that the methodologies that underpin and the verification is of the highest standard. Mark Carney is really clear on this. We're seeing a number of new methodologies coming to the UK now. We're looking at a number. We're thinking about if they work in the States, which tends to be ahead of us, particularly on soil carbon methodologies, will they work here? We're very clear that we want to deliver those within international verification standards. Gold standard VCS are key. The question that we're not quite sure at yet is where the market is going to be for these, i.e., is the market going to demand the same level of verification, the same standard, or is there going to be a tiered marketplace? We don't know that yet. We hope that the market goes for the top. The second unknown and a challenge, I think, is the cost of verification. And if the cost of verification, particularly for some of these lower income schemes, is higher than the actual monetization value that you can get from it, then it's not going to really be a very positive experience. So driving verification to modeling, digitized approaches rather than necessarily having always to go and take samples, which tend to be quite expensive, I think is an area to look at. Second last slide, just on markets. And I think one of the questions very much thrown often to us working in the sector is, well, where's the market for this? When's it coming? So I think there are some markets that are there now and some that are developing. So we know there is a market with government underwriting for woodland carbon. We know you've got the option to sell to the private sector. And that's a really interesting model, because one of the fears at the moment with landowners is, when do they jump into the market? Do they want to lock in a carbon at £20 a tonne? It might be £60 in 3 years' time. So thinking about taking away the fear of entry, I think, is quite important. Maybe some kind of market linked price would be interesting. We heard last week from Peter Simpson at Anglian Water around how water companies are very much looking to try and develop this market around producing water quality to the highest standard, but I think also supply. I've been having some very interesting conversations with Water Resources East around supply, on-farm storage, how it could be aggregated, and there could be an interesting model there around basket funding with different funding pots contributing into that overall ambition. We know biodiversity net gain is coming, and the Environment Bill will unlock that when it gets through. And then we start to think about and see some of these more fledgling initiatives coming on board. So carbon offsetting is coming, plenty of bilateral deals being talked about. Soil carbon is coming. I think by the end of this year, we will see some soil carbon deals being done. Elm coming, local initiatives. A couple of quick things to throw in before I move to my last slide. Farmers may well need to think about being net zero themselves before they can offset. Most aren't anywhere near that at the moment. And there is something here around some words here from the DEFRA Sustainable Farming Incentive around double funding. And we need to think about how we might to try and push so that additional funding from private sources could be allowed if farmers are into some of these government schemes. Yeah. Okay, so finally, helping farmers navigate this maze. DEFRA have run over the last year Future Farming a resilience program, which is supporting farmers through that. We and other organisations have been very much involved with that. We've produced a number of case studies. This was working with a farmer looking at carbon capture. It's a free service and should be something I think that most farmers could consider going forward. There's nothing to lose through engaging with it. Final slide, 3 takeaways. I would say the first one is think about having a baseline in place. I can't see a downside to it, and it can really open up some thinking about where you want to go as a farming business. Second one, prepare for a portfolio approach in the future. We're not going to have a luxury of a single cheque arriving in December that is large enough to actually really support our farming businesses. It's going to be multiple little cheques, lots of different ways of bringing in income, small amounts, and I think we're going to have to be operating a different way to access those. So a lot more innovation, a lot more market-led thinking, I think is going to be needed. And the last one, take advantage of what DEFRA is offering in support going forward. Thank you very much.
Great, thank you, Greg, and such a great way of kicking us off. I think, you know, the truth is that every single farmer around the country is trying to work out these components. So a really good, concise presentation on how to get ready. So next we have Paul Cottington. So Paul is the Environment Advisor at the NFU and working on the Poole Harbour project. So Paul, over to you.
Thank you very much, Tim, and thank you very much, Greg. And I'm coming at this from a slightly different scale and a slightly different angle, which I think, well, I hope complements what Greg said. And actually, I'm going to give away my take home for you, or one of my first ones, before I even start, which is, having listened to what Greg's had to say, one of my take homes for you was make sure you get good professional advice. And I think, given the volatility of what is happening within the agricultural sector at the moment, and just how many things are up in the air, whether it's what the regulators are doing with regulations and existing regulations, or what's happening with trading, what's happening in natural capital markets, what's happening with Elm, you need to make sure you can get good advice through all of this stuff. So that was one of my take homes. And also, to say I'm an imposter, I'm not in your part of this beautiful country. So I sit down here on the edge of Exmoor, and my water companies are Southwest Water and Wessex Water. And I have to say, we're very lucky to have very strong and good relationships with them. So hopefully you guys have the same with Anglian. And my little bit of disclosure as well is, and it links into something Greg was saying just now, which was around additionality and double funding. So this whole world is exceptionally niche and very deep. And so I found myself this morning going through all of this kind of stuff around double funding, additionality, stacking, and blah, blah, blah. And then I read Tim's notes and it said, this is going to be a fun and light-hearted session. So anyway, my fun and light-heartedness is shoving a picture of Mr. Motivator there. So I'm going through the Poole Harbour Nutrient Management Scheme. It's a farmer-led approach to natural capital. And I think a really crucial thing for you to understand is we've been doing this now for almost 3 years. And we've got a core group of farmers, about 8 of them, and they're extremely proud of what they do in terms of farming and what it is we're trying to develop. And hopefully through the next 12, 13 minutes, I can describe that fully for you. So outcomes for all of this. hopefully understand what creating a farmer-led nutrient scheme is at scale, and I'll go through that. Understanding the value of knowing your drivers for action, and understanding the value of aggregating supply and disaggregating stacking. So Poole Harbour is down in South Dorset. So this is a picture of it here. And if you're keen-eyed, you'll see within this, it's a natural harbour. You'll see some slight tinges of green in the water. And that's because there's algae there. So there's algae which is being fed by the sun and being fed by nutrients. And this algae is covering across the mats there, are impacting on important wetland habitats. So this is having an impact on all the food sources for all the birds around that area. So this whole area is designated as a special protection area. It's Ramsar and it's SSSI, and it's in unfavourable status. The nutrients coming in come from three sources. They come from sewage, they come from development, and they come from agriculture. And so our challenge within all of this is, one, there's a threat of legal action through a judicial review brought by 3 NGOs to essentially have some laws brought in, a statutory instrument called a water protection zone, which will cause change to happen to the various sectors down here, agriculture and water companies particularly, which will change how nutrients are going into the harbour. So what we have to do as our challenge is try to maintain our businesses, but also to reduce the nutrients coming in. So this is the area. So Poole Harbour is about 800 kilometres square. There's 548 or so farm holdings. We got the water company, which has got to do stuff for its phosphate and nitrates. And we've got developers who put in money through a community infrastructure levy. So they put money aside in order to be carbon neutral, not carbon neutral, to be nutrient neutral. And essentially, these are the three markets we're looking at trying to work with. We have additional stuff around other natural capital, around things like carbon, but our imperative driver is we've got to do something around nitrates. So our scheme, as our elevator pitch on all of this, is a whole catchment approach that brings together all the farmers in the Poole Harbour catchment under one entity. It will provide the tools and support for reducing nitrates and delivering additional environmental benefits for agriculture and other sectors. And we've created this pretty large vision for it, which is the farmers in the Poole Harbour catchments are the most nutrient efficient in the world. And it's interesting having this because it is, you know, it's a huge thing, but actually if we're going to try and deliver what we need to deliver, and for farming it's 500 tons of N reduction per year, over a third reduction, we really have to get pretty smart at what we do on all of this. So we have some aims. And also actually sitting in the background of all of this, we have some farmer red lines and principles, and our aims in all of this are whatever we do, we need to be achieving favourable status for the Poole Harbour area. We crucially want to grow current farm models. We got some exceptionally good dairy farms, pig farms, arable farms all around this area, and they're making good profit, they're working well. So we want to be able to enable them to carry on. We want to be, well, we have to work with existing regulations. So, and this is something that has been taken an awful lot of negotiation with the Environment Agency, is how do we do that? And we're sort of getting there. And I suppose the most important thing for all of this is down the bottom, this is a farmer owned and controlled approach. And this is, you know, kind of partly the proud part of all of this, but, you know, people really, they're invested into this. And you'll see in a second, actually, just how we've done with going out to the farmers. They see this as an important thing, not only for the sector, but for their businesses. And so actually, this is a farming agent, which the red line maps out the catchment area. The bits in the kind of, I don't know what you call it, kind of purpley pinky type thing, those farms have all signed, or that land area, an expression of interest to be part of the option which we've created. So back in 2019, and actually just something to note, stuff like this takes an awful lot of time. We came up with this back in 2018-ish, and it's taken 3 years to get to this point. And an awful lot of that has been trying to get funding from government and whatever sources to try and get all of this going. But anyway, 2019, we went out, spoke to, I don't know, probably 120 odd farmers, and we presented all the options and said, look, you can do nothing, you can, and that will result in potentially having a water protection zone brought in now or in 4 years' time, or we can take an action now where we will try and solve this. And we had, of all of the farms, only one said they wouldn't want to do it. And that was because they didn't think we would get everyone to sign up. And we got 75% of the land area to come into it. So the 5 aspects, and I'll go into the detail of what we're doing. So one, we're creating a farmer-owned entity, and this is almost completed. So it's called Poole Harbour Agricultural Group, and it's a community interest company, and will be the thing that all the farmers become a member of. We're developing all the governance that goes with this, and crucially all the rules that we have to have in terms of working with the Environment Agency and potentially trading with between the farmers and with the likes of the water company. We're having to find a nutrient accounting tool, which I'll discuss in a second. We're looking at how we do our trading and the other bits, which, and they're kind of secondary for us, but they are, in the end, they're going to probably be partly the most important thing. And as what Greg was saying about looking at your portfolio, is accessing new markets. So the way all of this works for us is you have the farmers, of which there's 548 farm holdings. They become a member of our farmer group, which has a certain bunch of rules within it. There is a partner group, which is made up of the regulators, so Natural England and the Environment Agency. It's got the key buyers, so the developers and the water companies and the farmers, and also a representative from the catchment partnership. So they kind of create a system operator. They oversee all of this thing. There's a target that's set, which I'll show you in a second. And that applies to essentially to the water company, the farmers and developers. The farmer will use a nutrient balancing tool. So essentially they take all of the farm operations, put it into an accounting tool, and that will produce a balance in terms of nitrates. That then is something that can be traded, and it can go to the water companies or developers, and it can also be for the farmers. And the crucial thing within all of this, and it's another big part of the work, is we have to do verification to make sure it's to a standard. So this is what we're working to. This is a glide path given by the Environment Agency, sits in the document called consent order. And essentially, us now, we're in 2021, the farmer's target will be at around something like 28 kilos. And the aim is by 2030 to take all farmers down to 18 kilos. There is a crucial part in all of this, which is anyone who is in our scheme is essentially an Environment Agency approved scheme. So they can follow this glide path. Anyone who is out of it will be written to the Environment Agency and told that according to the environmental permitting regs and as a result of the habitat regs, they must meet this end target, the 18 kilos right now. So there is an advantage for farmers coming into our scheme because they have a more gradual glide path. This one I'm just going to do very briefly because one, don't have a huge amount of time, and two, there's a little bit of complexity, but it relates to something Greg was saying in terms of with carbon, you might have to meet an existing requirement before you can do some trading. And this is exactly the same for us with nutrient trading. What this diagram shows is at the very top is high leaching essentially, and at the very bottom is very low leaching. The red aspect, actually taking this line across the middle, you've got a nutrient target. So this is the target, same as the glide path here. So you're either at an 18 or say a 28 or something. So the farmer will have a target they have to go through. Part of it must be done through existing regulations. So you can't trade your way out of an MBZ. The other part of it for them falls into this beige part. So the farmer, as long as they're meeting their compliance side of it and in our approved scheme, can essentially deal with this beige part by going to another farmer who is in the blue, who has met all of their beige part, met all the red side of it, doing their existing regulations, essentially has credits to sell, so they can balance themselves up. And this essentially is kind of the basis for our scheme. You have to, one, meet agricultural fair share, you have to meet your existing regulations, and off you go. Crucial thing is, as soon as the farmers are over and into the blue, then they can also start trading with the likes of a water company. This bit, very briefly on this, there are 3 drivers for action, as far as I can see, for any farm, and that happens at whatever scale you're looking at. So one is personal goals and cultural goals, so that's your ethics and information. 2 is around the finances, whether you're going to make or lose money, and 3 is regulations and contracts. The imperative driver that we have had for Poole Harbour for us to take action is the fact that there is a law coming that will make the businesses more difficult to operate, stroke impossible for some, because they will never be able to get to this target. So the regulatory driver, this top bit, is the bit that has really made a difference. And it's not to say actually that after that you don't have other drivers. So the finances and things are absolutely crucial. There is, people won't do this if there isn't a net benefit. It's just the reason why we need to take an action. In the background in all of this, we've got help from Troidos Bank, who are looking at our business model, so where we can get private investment in order to help pay for the measures that go on ground, and where they derive a value, and looking at other markets, so whether it's kind of into carbon or how we can get best value out of working with the water company. We've got a bunch of phases. We're currently in this investment readiness phase, and we're just about to go into a trial where we're looking at a bunch of the systems. We're trialing out how we're going to do various bits of trading and what is going to be appropriate. And then pretty toot the sweet, we've got to move into our pilot and rollout phase. And so we'll be moving towards pilot probably September, October, and hopefully have all the systems in place for that. So there are a number of benefits that come out of all of this. So not only do we hope that we will be able to do the nitrate side of things, but when the farmers are collecting data around nutrient accounting, they will essentially also be collecting data around carbon and phosphates as well. So there are potentially other markets which we can sell to, and we're going to be doing it to the highest levels. So we'll be all of our verification done to a standard which obviously meets the regulator. So there are a lot of benefits that accrue out of this. So we had a bunch of options, which I've kind of described. And there goes my alarm. I think my time's almost up. I've got 2 slides. So we've gone through all our options. We have chosen to go for an alternative approach. Our risks and obstacles in all of this. Looking at those, there are 2 main risks. One is, how do we get the farmers in? Can we have enough push and pull benefits and disbenefits for being in the scheme? And probably the biggest one is making sure we get funding in order to make it all operable. So your 3 take homes, and funny enough, one of them is the same as Greg's. Know your baselines. So this is whether you're in a Poole Harbour scheme or anything, but fully understand your current business model, how you're regulatory compliant, and the regulations seem to be getting more stringently applied, and your environmental and business opportunities. Do make sure you get good advice and information. And from the perspective of what we're talking about here with Poole Harbour, have a chat with your neighbours and others to see, A, can you learn from them in terms of what they're doing? And there's good programs like the Burrell program over in Ireland, where farmer-led schemes where people learn from each other, but also can you group together and form a cluster? Thank you very much.
Brilliant, Paul. Thank you. And I think, such an important and, again, timely conversation to have about, how do we start delivering these opportunities in the east of England as well? So I think lots of conversations to have. So we've now got just one other section. We're going to do the Slido before we start the Q&A. So what I'm going to do is I'm sure most of you are very aware of how this all works now. I'm going to share my screen. We have 3 questions. This time we've got a question from Jake, we've got a question from Greg, and one from Paul. So the question that Jake has is, what natural capital assets would you want to prioritize? So you can either answer this by going into the chat, getting the link, and then start typing, or indeed you can use the QR code in the top left-hand corner, use your phone, and you should be able to start answering through your phone. So what natural capital assets would you want to prioritize? We had a feeling soil might come out quite high, but So what is it that you want to prioritize? Where do you think that investment should go? What would you want to prioritize in terms of management of your farmed environment? Soil, carbon, water, biodiversity, carbon. What else have we got around the outside? So we've got water, wildlife, woodland, water sustainability, clean water, water resources, soil, landscape, ancient woodland. Soil is still very much at the forefront, which we had a feeling it might be. So we've got main ones: soil, water, biodiversity, soil, carbon, woodland. Fantastic. All right, everyone. I will now go on to the next question. So let's do that. So get that live, grab the link, send it through. Okay. So remember, don't answer in the chat. Grab the link and that will bring you through, and then your answers will actually flow through onto the screen. So the question that Greg has: in your opinion, what type of organizations are most likely to fund natural capital enhancement on farms? Government and water companies, okay, banks, great. And just remember, you can either use the link in the chat function, so hopefully you can find that, or you can get your phone out, turn your camera on, hover over the QR code, and hopefully that will allow you to open up this web browser. So in your opinion, what type of organizations are most likely to fund natural capital enhancement on farms? So government, developers, corporates, private sector, water companies. Government still very much at the forefront. We've also got supermarkets, national parks, green investment funds, LEPs, multinational businesses, entrepreneurs, food retailers, philanthropy, polluters, no one, charities. Okay. What's changing in the center? Supermarkets are there, water companies, corporates. Okay, fantastic. All right, a great mix there. I can see lottery fund. Okay, great. Thank you, everyone. We will now transition on to the last question. So I'm just going to deactivate that one, and we're going to go on to Paul's question. Again, I'm just going to share this through the chat. Okay. And let's just quickly do this. And just a reminder as well, please do ask any questions you have, either Paul or Greg, through the Q&A function, because the Q&A section is going to start just after this. So the question is, what do you think the benefits of a farmer-owned group are for delivering natural capital? Scale, collaboration, invested participants, accountability, interesting, land knowledge, I just saw that. Slightly, that's what Ian Gould was sharing this morning on our interview with. Peer-to-peer learning, practice, engagement, mutual support, public goodwill, shared agreement of costings. We've got scale, landscape scale, engagement, knowledge, land knowledge, economies of scale, peer-to-peer learning, less regulation, local knowledge, better environment, public goodwill is still there, synergy. Fantastic. Understand when things go wrong, very important. More cash, I saw there. I think that's certainly going to be the case. Brilliant. Okay, fantastic. Thank you, everybody. All right, we'll stop that there. And we're going to share all these through social media. So do keep an eye out for those. So I'm going to stop sharing my screen now, and we're going to go back to the Q&A function section. So Jake, Greg, Paul, if you wouldn't mind turning your cameras on, unmuting yourself, and Jake, over to you for the next 15 minutes of Q&A.
Okay, two very different but informative presentations, and actually this just, as a land manager, just this makes me feel more and more confused. And interesting, the hearing that we're going to have money removed, where a new market's going to emerge, markets that Paul is kind of trying to create and has created. The Slido, soil, right answer, well done, everyone. Number two, government being the leader. The reality check is it's not going to be government, I'm afraid. The private sector will be these new markets that we have to deal with. And I think the third question that the majority of you answered correctly in various formats was scale and collaboration. From Greg's presentation right at the start, collaboration is key. So great, lots of things to do, and it's also how we what we talked about, what has been talked about today was natural capital. Fundamentally, it's all about natural capital. And what is the key driver of natural capital, whether it's all of the offsets of biodiversity and water and air? Fundamentally, it is soil. So that is the key driver. Right, let me get on to some questions. Tim's been prodding me with what I have to answer. Right, Alan Granger said, where do you start to measure and what on your farm carbon position is? I think that's one for Greg to begin with.
That is twofold really. One is it's relatively easy now to get a measure of your position as a polluter, so measure your own footprint on a farm. Plenty of online tools to do that are reasonably user friendly. They're not going to be very strong on sequestration, but they're very good on understanding where you are and giving you a really good guide as to what you might think about changing going forward, and monitor it year on year. That'd be the first one. I think when the point of view of actually, if you're looking at soil carbon position, I would say as soon as possible. Certainly what we're seeing now, in particularly, I was looking at a market that's developing in the US, they are allowing 5 years previous of soil carbon improvement to be monetized in a deal that they've done. So the sooner you get on board with it, the sooner you've got a track record, you've got something to evidence improvement, even if it's 5 years in the past. So I would say as soon as possible.
Wonderful. Yeah, go with that. Paul, how will nitrogen trading work? And I know when we met 2 years ago, I think we all lost a year somewhere, but 2 years ago when we met, we were talking about reverse auction trading. So I wondered whether my part of the question is that still part of what you're working on? And how will nitrogen trading work?
So there was a question that came in as well to the panels, which was, have we looked at what's going on in New Zealand at Lake Taupo? And yes, we have. So there are examples of what's going on around the world, whether it's there or in Chesapeake over in the States. And the States actually has a lot of experience of doing this and have traded on obscure things like water temperature and pH levels. So there are a number of ways of doing it. For us, reverse auctions are happening already in the area. So every year, Wessex Water offset about 40 or so tons of their nitrate with farmers, and it's got to increase to about 90 odd through a reverse auction process. So that's a particular way of doing it. For us, how we actually trade, we'll be testing in May time, and an awful lot of it is going to be down to scale. So farmers will be filling in an accounting tool. They will find out how much N they have to buy or sell, whether it's 50 tons or whatever. And at the most simple level of all of this, we could just have a bulletin board where you just match people up. Yeah, so things do not need to be mentally difficult. I think one of our tricky things is understanding where is the price for all of this, so price determination. And actually one of the things we've got is, because there's been all this work with reverse auctions, and not just in this area but across the country, we have a goodish idea of where the prices are for nitrates. But the first ones are the cheap ones. As time goes on and we're going into our bottom 500, it's going to get more pricey, and at that point it's going to become a more competitive market. So what you were predicting all of this is, to begin with, it will be low volumes traded, because most people will be able to take the measures on farm, and that's right, they'll put in cover crops or whatever else they need to. And then as time goes on and it becomes more tricky, you'll be encouraging, say, the likes of, say, a Greg, who will be wanting to put in a wetland, because that's advantageous. They'll get in some investment, and then this is where it becomes scalable. So you then put in a wetland, and that's valuable not only for doing nitrates, but it's got phosphate value and carbon value. And if you can chuck in a couple of great crested newts, then you're doing all right.
Brilliant. I've got, this is to both of you really, this is from Andrew Elston. What regulation of these new markets will there be to protect all parties?
It's like, I mean, on our one, blimey, the regulations are honestly, it's a nightmare. So we have, we're a voluntary scheme. which is underpinned by a regulation, but we're essentially, the Environment Agency is creating what they call an approved scheme. Yeah, so it has certain rules that it has to follow, and if we don't follow those, then we will essentially be facing a statutory instrument. There will also be all of this stuff around the existing rules like SAFO compliance and MVZ and farming rules for water. And there is a lot of tension around how all of that is done and where the role of enforcement and things sit. Yeah, so what we know is whatever result a farmer produces, so say it's a Greg, if he's saying that he's doing 10 tons of N reduction, then that's got to be a bona fide thing, and there must be a verification system underneath it.
Can I just quickly add that from a carbon perspective? So what we're talking about here is the unregulated market. The regulated market for carbon is, European emission system, cap and trade. This is all voluntary, unregulated. And so it's very much down to the market to police itself. And that's why the importance, I think, of some of these standards and conforming to those standards is going to be the way that it happens. Ultimately, it's going to come down to the buyers. If the buyers insist on only buying at a certain quality covered by a standard, that will drive the integrity of the market.
Great, thanks guys. Right, one that's quite dear to my heart from Thomas Pearson. And I think I'd like both of you to answer this because I think you both have a slightly different view on it. But have you seen any examples of local private sector paying a premium for carbon or biodiversity? Because it's going to affect their business. So I think there are definitely local markets. Do they achieve a premium? I also, if you're delivering enhanced carbon sequestration and prolonged storage and enhanced biodiversity, do you think that is an added value product? Paul?
The honest answer for me, I don't particularly know, but the bit I would kind of surmise in all of this is often the farmers are working pretty blind in terms of where the prices are and how to achieve the best value in all of this, and the power sits with the buyer. And so there is, you can see that certainly around us, there's a lot of pressure around development and, having a net gain. And if the farmers can be grouped and understand the prices better, then that should put them in a stronger position. I mean, in terms of how do you enhance it, I'm not sure how you can do that, but what you want to do is trying to layer on top of each other. Hopefully, Greg, you'd know.
I would say to that, I haven't got any examples of it happening just yet. I do have some examples of trying to nudge farmers to have those conversations, local carbon into a local market. And I think there's a real opportunity there. And I think that this is where being a bit of a market maker is the exciting part of this new world we're in. Packaging something that's got a local context that might have a real value to a local business and working that out with them. Exciting proposition. I would also just say as well, I do know some local businesses and entities who now have got a really strong understanding of what they need to offset. So that has changed in the last 6-12 months. I don't think it was there before. So if you like, there is a growing ready demand that's being articulated amongst these businesses.
Okay, so we talked. So I'm not in a cluster group. I'm not in a river catchment. I'm a 67-year-old farmer. My holding is 250 acres, 100 hectares average size. Where do I go? I can't afford a very grand land agent. My NFU advisor is extremely busy elsewhere doing lots of webinars. Where do I go? Because this historically we've all sort of sat on our own. And I've just become deeply confused as the farmer who is new to this. And my support is going to be pulled from under my feet by 50% in the next 4 years. Where do I go? How do I access information easily?
For me, I'll tell you what, this is $1 million question, yeah? So we were looking at the Axe catchment, which is down in Dorset, Devon and Somerset. And the farmers there have a massive phosphate issue that has to be resolved. We worked out that for that particular farmer, the 67-year-old, 200 hectares, whatever it is, hasn't got a lot of advice, does know what to do. He might need 8 days worth of advice in order to get there. And the problem is there isn't that massive amount. There certainly isn't all of the government support out there. There's individual projects that might help you. And I think if there was an area where I would push government at the moment, is making sure that there is access to farmers being able to look at their business models, look at compliance on farms, looking at opportunities. I mean, there are good advisors out there. I'd expect there probably aren't enough, to be honest, as well, and probably reassuringly expensive.
I think one of the answers to your question, Jake, is there's a bit of a tough message there, in that this is not going to work for everybody. And I think that ELMS and what comes in natural capital is not going to replace BPS for a significant proportion of farmers. And part of the policy initiatives in DEFRA is around industry restructuring. And I think there will be significant change driven by it. That's a tough message, but I do think that's the way it's heading for some. Having said that, I think the way to really alleviate that is, I come back to aggregation. I come back to lots of little things pulled together into something significant to produce scale will be part of the answer. And I'm not sure where those aggregators are going to come from yet. And maybe there is a role for someone on this call to lead that.
And a slight add-on to that is, already there are multiple businesses trying to access my farm for carbon sequestration, and it's a newly emerging market. Where do we start? So we want to do this, and we want to get engaged, and we think we want to open this new market. We want to do a deal with someone. The shark springs to mind. Quick takers, and actually I then put my farm business at risk. How do we protect ourselves against that?
We're kind of in a Wild West moment, yeah. And there are an awful lot of folk who are going out and doing snake oil kind of sales. And yeah, where do you go to on it? In terms of, do we say as an NFU, have we done due diligence on a bunch of firms in order to go, yeah, you should use this one or that one? We don't. And it's something we are looking at in terms of who you can go to and what you should do. I think it is that bit of go as quickly as you can, but take as long as you can about doing that, isn't it? And taking as much advice as you can from a roundabout. And I think, Greg, you kind of really pointed out there is a massive change that is occurring within agriculture at the moment, and a feeling of pressure, and so people will feel a bit panicky. But there isn't that kind of golden list of certified advisors who are absolutely amazeballs, which is a problem.
I think we've got, with the way that the biggest impact is BPS reductions, we've got a couple of years, I think, where I think farmers will roll with it. There's a couple of years of time where it's actually not going to be absolutely, decimate farming businesses. Let's use that time to try and pull some of these initiatives together. There is a bit of that time. When it comes to advisors and where do you go, I don't know. Let's see what comes. One of the things I would say would be the carbon market it would be great if we could really get some momentum behind building some market related uplift to carbon price. Because if people jump in now at 15 quid a tonne and it's 60 in 5 years' time, there's going to be a lot of unhappy people around. So that uplift can be built in as part of a normal practice of doing things. I think it will really give people more confidence to work with the new markets.
I'd just add on to this bit of just one of the good things about trying to pull together a group of farm. I mean, it's a mental thing to try and do, bring 548 farm holdings together into one grouping, eh? But the advantage for doing that is actually you can apply your due diligence at scale. And actually you're then able to, use the farmer group to be able to go, these are the people that you can work with and give confidence within that system. So there is a value for people forming clusters and doing things together.
Okay, I'm conscious of time. One last question, which is added value. I think, Greg, you mentioned about added value. And then we talked about maintaining our income streams through going into some of the stewardship, or and then we look at the huge uptake of stewardship and the high percentage of farms that are putting 20+% of their farm business into stewardship. If I jump into stewardship, I don't create the added value for my new arrangement with this deal that I've made 18 months later, because I've made the improvements already. So should I step back and wait on all aspects, or should I just take the plunge in stewardship? I have a personal view on this, which I couldn't possibly comment on, but anyway.
My view would be, I don't think there's any reason not to go into stewardship now. I think it builds environmental credentials for delivery for farmers that are only going to be a good thing in the future. I think you're actually building that land asset, and it's damn good income, really is, in the current climate. I think this whole thing around, and there was a question I saw around, if I'm doing everything already, what can I do in the future? That is a difficult one, actually, but that doesn't mean don't do it now, because you take the advantage earlier from it. I think the opportunity in the future is going to be, I've been doing it for all these years, I can produce the best quality output, therefore, Mr. Marketplace, I want a higher price for it.
Comes back to my enhanced value product. Paul, Greg to meet you again, virtually for the first time. Greg, lovely to meet you. And I'm going to pass over to the big main man, Tim.
Great. Well, guys, just I want to say a huge thank you. I think, this is obviously an ongoing conversation. We're definitely not at the end of it now. And I think, this is what I really hope from this webinar series is, with everything that Anglian Water are looking to do and achieve in the east of England, whatever we can do to continue to carry on this conversation and really put these systems in place to really deliver public benefits. I think that's what this whole series is about, is the ongoing conversation. I was just going to say, Jake, thank you so much for chairing this. I just wondered if you had any closing comments that you would actually like to make, summarizing kind of what you've heard today and kind of what you feel the next steps would be.
So I would take away from this, don't be nervous. There are going to be some amazing opportunities around the corner. I think the market will the sharks will swim away, and there will be market leaders that we can be assured that will give us best value for the best product that we deliver. So I'm just bide our time. I think we're only being modulated anything from 5 to 15% on most farm holdings this year. There is stewardship that can maintain that income for your farm business, and I think there will be some pilot work done by a range of different individuals over the next 6 to 18 months. And that will really start to shape the market, that actually all of you can see is what is available. And you will see the leaders. The leaders will come out fairly quickly that will give you best value for money.
Perfect. Thank you, Jake. And I think those leaders that are going to come out again would love to kind of make their contacts available through what we're doing at Land Management 2.0. So really kind of watch this space. So last things to do in the last 2 minutes as we're wrapping up. Firstly, I just want to say a huge thank you to Paul, Greg, and Jake for coming on this afternoon and sharing everything that you've kind of learned over the years and making that so concisely available. So thank you massively for contributing to the conversation. And we look forward to ongoing conversation, as I say, going forward. The last thing to say is, we have a feedback form which we'd love to share with you, which Mark is going to put through the chat now. We'd love to kind of understand what more we can do in these series to really help add value to you guys. And secondly, I want to say that we have plenty more coming up. We've got an interview with Lizzie Emmett, who runs the Upper Wensum Rivers, Upper Wensum Farmer Group in the east of England. So we're interviewing her next Thursday, so do come along to that. And next week on the webinar series, we have the title, The Landscape is Changing, Exploring Regional Trends and Opportunities for Investment. We have Emily Norton from Savills, and we have the team from Commonland from Holland, who are going to be sharing what they've learned through different projects throughout the whole of Europe, looking into how to really design and deliver landscape scale change. So it's going to be absolutely fascinating. That's next Thursday, 15th of April at 4:30. So come along, get involved, be part of the conversation, and we really look forward to seeing you there. So I think that's enough from me, but thank you very much once again to everyone. And greatly look forward to the ongoing conversation. Great. Thanks, everyone.
Thanks. Bye.
Bye.